Monopoly by Grit.
Welcome to Monopoly by Grit. This is a podcast series which we started. This is going to be the first episode which we're going to do. It's all about property. We talk about property investment, real estate markets across Australia, as well as property management. It's all about property. So this is going to be a series where we do a number of episodes talking about different varieties of property investments, property management, and so forth, which will add a lot of value to you. And we are going to bring in experts in the field so that you can get some real valuable insights. Today we have Adam Brien from Frasers Property, which is one of the largest property developers across Australia. Adam, welcome to Monopoly.
Thanks, Naveen, and thanks to you and the Grit Property team for inviting me today. A pleasure to be here.
No worries. I mean, before we start, this was all inspired by the board game of Monopoly, where we were playing Monopoly at office, and then these guys want to do a podcast, and then I said, let's call it Monopoly by Grit, and that's how it all started.
I hope you're luckier than me at Monopoly, mate. It's not my game, to be honest, but
I was
it is
going to
good
ask
fun.
you, as a kid, were you playing Monopoly?
Yes. To give you an understanding, my family, very competitive family, and Monopoly, as you know, is a long game. It can be a long game. So in my family, it often led to a lot of tears, perhaps the occasional board being thrown. It wasn't necessarily a great ending for our Monopoly, but it was good fun.
Yeah, it's indeed good fun. It's one of my favorites, and we always had a thief who was the banker. He's always a thief who used to steal money from the bank. All right, let's get into it. So let's talk about this. We are talking about property investment and planning.
Yep.
Because sometimes you need to plan your property investment journey. First point of discussion is, why would someone consider even investing in investment properties? What are your thoughts about that?
Yeah, well, I think given this is my 16th year with Frasers, if you don't have that belief and that passion for property, you're probably in the wrong industry for myself. But I think the beauty is with property, there's so many diverse opportunities out there that can suit people's different needs.
Yeah.
And, you know, the simple fact is, I mean, if you look back to 1980, okay, your average house price in Melbourne was just over $76,000.
Correct.
Okay. So you can see already the journey a lot of investors that have gone on that have been in a position to do that. Not everyone's lucky enough to be in a position to do it. But what I like particularly about working with Frasers is because we're quite a diverse company.
Yeah.
It means we have lots of opportunities that will suit different people.
Yeah.
So, you know, the other question that sometimes comes from this, Naveen, particularly with investors, do I buy an apartment? Do I buy a block of land? Do I buy a house? You know, and everyone's got different views with this. Yeah. You know, personally, I've seen everything work out for different clients, and it really comes back to what appeals to them, what they're comfortable with.
Yeah.
I guess what their trusted advisors are saying that and suggesting to them that will suit their requirements and what they're looking for with their future goals.
Yeah.
But as I say, you know, let's look at Melbourne over the last 20 odd years.
Yeah.
So we've seen significant growth in housing. Perhaps we haven't seen such high growth in apartments.
Correct.
But we've seen some really good returns to investors in apartments.
Correct.
So it's balancing that out for people as to what works.
Yeah.
So I think there's something for everybody in property.
Yeah.
And I just think it's just such a fantastic asset class that, you know, I guess both of us have grown to love, and we're in the industry for a long time. So, yeah.
No, exactly. I mean, I was thinking, if you look at all asset classes where people can invest on, residential property is one, commercial property, stocks, or you can put your money in superannuation. That's pretty much it. And out of which all of these, residential property is probably the best because it holds its value, as you rightly said, 76,000 1980s, and you're touching 1 million now. And the numbers talk for itself. It just, as long as you're patient, you just can't lose with property, especially residential property. And also, there's a belief among people, cash is the king. But I haven't crossed a single billionaire or millionaire who has made their money by holding on to their cash. So literally, cash is trash, but the cash flow is the king. So you got to invest in the right asset class to make money. And no billionaire has ever held on to their cash and made their billions. So,
yeah, I agree 100%. And it's interesting that you do see that, don't you? It's quite evident that a lot of successful people, a lot of leading business people have invested in property. And we know the reasons why. There's growth, there's good returns, there's great opportunities with property. But as I say, I think it comes back to it doesn't matter who you are.
yeah.
You know, whether you're a family that's trying to make their way through life, and you've got your couple of kids, etc., and you're working hard to get into a position to maybe get your first investment.
Correct.
Whatever it may be, or whether you've got multiple investments. But it's certainly, I think, a proven asset class, as you say, Navin, that's performed really well.
Definitely. And the next point of discussion is, where is the Australian wealth stored at? As I said, it can be in one of those four. It can be residential real estate, commercial real estate, superannuation, or ASX, or the stock exchange. Where do you think the most money is stored at right now?
It's an interesting one. Us tied to, property and, wealth creation, I guess, out of property, if that's where you're leading with that question. Even through, I guess, when you're talking about superannuation now, a lot of people are looking at investing in property through their superannuation as well, aren't they? So, I don't know percentages. I don't know the facts and figures, to be honest, on where that accumulation of wealth is across those various markets. But certainly there's a big component tied to property and particularly residential.
Yeah.
I think, how do I say it? It's particularly in Australia, it's almost like a built-in, and I think it's still passed on through generations. It's almost that built-in level of success or achievement to own a property.
Yeah.
So, and I think that's where we're seeing people continue to purchase and invest in particularly residential real estate.
Yeah.
It's what they know. It's what they've been sort of passed on and told over the generations. It's aspirational. It's people's dreams. So therefore, you're seeing a lot of that wealth being accumulated and stored into property. If that's sort of where you're headed with that, Navin, I'm not sure. But yeah, that's my take on it.
So I did some research on it because this was a question I asked myself. And at a glance, I was thinking most people must be investing in the stock exchange. Because if you talk to an average friend or someone who meet on the street and where would you invest in, 9 out of 10 would say, I'll just get some stocks.
Yeah.
So that was my thinking too. So that I did the research. Out of all investments, out of the 4 asset classes, 9.6 trillion goes into residential real estate, 3.7 trillion goes into superannuation, 2.7 trillion goes to ASX or stock exchange, 1.7 goes to commercial real estate.
Yeah, there you go.
So that's a huge jump. And if you really think of it, as you rightly said, everyone wants to buy a home.
Yeah.
Forget about investments. They just want to buy a home for themselves, a family home. And that's most 95 people, that's their aspiration. And that's what people do. And accumulation over a period of years.
Yeah.
And now the value of residential property market is 9.6 trillion, which is astounding.
It's amazing, and as always, you learn something new every day, Navin. So I picked up something today from you. I think I was on the right track, but perhaps I didn't know the facts and figures. But it's not surprising at the end of the day. And as you say, I think when you break it down to the basics of, as I was saying before, it makes sense why that figure is so high.
Yeah,
I think, and it's really interesting to see, the amount of people, as you say, that are using that asset class for their investment or to purchase in.
Yeah. How important is property investment planning? So say someone and is an investor, it can be a corporate, it can be individual. How important it is, do you think planning is in the investment journey?
Yeah, look, I think the good thing now, and as technology just keeps, going through the roof, and I think perhaps like me, Navin, it's hard to keep up with it sometimes as we're getting a little bit older. But there's so much information out there, which I think is brilliant.
Yeah.
And to me, when we're dealing with clients that we're meeting every day, a lot of our clients are really knowledgeable about buying, about what they want to do, about what they want to invest in, how their investment will work for them. They're getting this information that's available to them. I think, like anything, I don't think, even with the way technology is going, I think particularly with property, it's still coming down to that relationship that people have, whether it's with their accountant, whether it's with their investment advisor, whether it's with their local real estate agent, or agencies like Grit Property, perhaps salespeople at a developer like Frasers. But if they've dealt with people before, they've got that great relationship, they've got that trust with people, they're going to use that and take that knowledge that they're getting passed on from those key people in their lives to then plan and make that investment.
Yep.
So I think that's the key to it for people that are looking to invest. I would be doing the same myself.
Yeah.
If I'm buying an investment, I'm talking to the people I know in the industry well. My broker that I've known for 15 plus years.
Yeah.
I'd speak to him. I'm thinking about doing this. Does that make sense?
Yeah.
I'd chat to my accountant. Again, my family have an accountancy business, which is quite handy.
Yeah.
I can chat to them. What do you think? Should do this? Should I do something through my super?
Yeah.
Should I do something with the funds that I've got?
Yeah.
So that planning is definitely, that type of planning is definitely key. But I think from when I compare to when I first started in the industry, it just felt like people thought it was a good idea, but maybe didn't have the knowledge to make the best decision.
Correct.
It feels like now that people have that knowledge.
Yeah.
And for us as a developer, it's more of, okay, what you want. You've got the information.
Yeah.
Okay, this is going to work for you. It fits your price point.
Yeah.
It'll give you the return that you need. It's a great investment for you. So I think that's how it ties in with that investment planning.
Yeah.
That it's absolutely critical. Yeah. Absolutely.
Yeah. Absolutely. I mean, we that's what we do day in, day out. And what we always have the conversation is, where are you at right now and where do you want to be in the next 10, 20, 30 years?
Yep.
Because if you don't know where you're at right now, you can't do what you want to do in the future. So it can be, you might have only your family home, or you might have no properties at all. You might have 5 properties, but then you should have a goal or a dream of how many properties you want to end up with, or whatever your aspirations are. You might just want to travel the world and make some money, whatever it is. So that conversation is critical to see where you are, where you want to go, and then you can build it up and come up with a strategy and come up with a plan. As you said, tax minimization. You might have a bunch of superannuation, what you can do with it. So that having a plan and a strategy is absolutely critical. Rather than just because your friend bought investment property, just go and buy investment property. But have a plan in place so that you know where you're going.
100%, Navin. And as you say, I mean, everyone's circumstance is going to be different. And I think that's the key to it, as you say, just because your brother's gone out and bought a block of land out, 40 kilometres out of Melbourne and they're happy and it's a great investment for them, is that going to work for what you want?
Yeah, exactly.
Now, the other thing is too, not all of us know where we want to be in 20, 30 years as well.
Correct.
And I think some people struggle with that to say, oh, well, yes, I need a goal and that may not relate to their circumstances, but you might be able to relate to them by saying, okay, look at property growth.
Yeah.
Look how this can work for you and add to your lifestyle and give you and your kids perhaps some more security as you grow older.
Yeah.
And great, you've got this apartment, you've got this block of land, or you've got this property that will give you that security over the next, and that you can use when you retire, as you say, the planning. So, whether you've got that big game plan or not, you can still do even that basic research and basic sort of investor knowledge from your network.
Correct.
And make a decision that hopefully will work really well for you.
And as you rightly said, you need to have a team in place. Your financial planner, your accountant, your property consultant, the developers, real estate agent to rent it out. So I think that having that team is critical too, so that you can execute that plan accordingly. And I mean, although we plan, we execute, but it's not going to be hunky-dory for anyone. There will be risks. There will be issues which will pop up. What are the risks do you foresee for an investor to be aware of in a property investment journey?
Look, it's there's multiple things there, Navin, but I think what we just spoke about in the last question, you're going to cut out a lot of your element of risk when you do some good planning.
Yeah.
Right. And then you'll cut a lot of that out. And then, to me, it's just looking at the market, looking at the facts and figures. I mean, Melbourne is a great one, I think, at the moment to be looking at. And what we're finding is, sorry if we're going off topic a little bit here, but we're finding a lot of, and the market changes all the time, as we know.
Yeah.
But a lot of our investor groups from out of Sydney and out of Brisbane are now starting to look back into Melbourne, when perhaps 18 months ago, Brisbane was a market that a lot of people were looking at. So, now we're seeing in Melbourne, vacancy rates, what's happening with vacancy rates for investors coming back into the market with rentals. A lot of property experts are saying now, 10, 15% growth on your property rental this year alone. You've got, I think, was it last week or the week before, Melbourne just topped Sydney in terms of population.
Yeah.
So, again, coming back to that planning story, and yes, there can be things, and there's so many things. It could be changes of jobs. It can be a variety of things that happen in your life, which you can plan as much as you like, but when things happen, it's going to happen. But I think, again, coming back to that planning side, if you've got a real good network, you're getting the right advice, you're not overstretching yourself, and working out, the basic top things. Okay, if I buy that investment property, what's it going to cost me a month, a week?
Yep.
You know, am I going to be out of pocket? Okay, if my wife isn't working,
Yep.
is that still affordable for me because we might be having a family?
Yeah.
You know, all that's all part of that probably that first step.
Yeah.
And then you can cover off a lot of these potential hurdles that may happen.
Yeah.
You know, I've always been advised, and I think that the typical advice you're going to get is, you know, property typically it is the longer term play.
Correct.
You know, we're always a little bit cautious, or certainly I'm cautious if someone was to come to me and say, hey, Adam, I want to buy this and I'll probably sell it in a year or two. I'd be like, oh, okay, get your advice. Have you spoken? Who have you spoken to?
Yeah.
You know, yes, again, we don't have a crystal ball, so it's not something that we are going to guarantee capital growth or X amount of rental or whatever, but that sends off a few alarm bells, I guess, if someone's looking at a short-term, you know, flip and whatever.
Yeah.
That probably has been done before, and perhaps, you know, who knows where the market's heading. If that's an opportunity that comes up, it may. I'm not saying that it's not something that can be done.
Yeah.
But obviously, it's that sort of thing is a higher risk.
Yeah.
And you want to make sure that you're getting the right advice about doing that. But I think in general, if you're looking more that longer term, you know, personally, I'm really conservative. So I know when I've been lucky enough to invest, I'm investing and I'm not selling it.
Yeah.
I'm leaving it.
Yeah.
But again, is that the right thing for everybody to do?
Yeah.
That's for everyone else to investigate and find out.
Absolutely.
Yeah.
Yeah, I mean, talking about risk, one is the government regulation changes. That you have no control of.
Yep.
We had government coming in and scrutinizing the banks and tightening the lending. So that those sort of things, there's no control over it. But again, you can mitigate that sort of risk to a certain degree. Interest rate rises. Again, you have no control of it, but that's a normal cycle. Interest rates go up, it goes down. And as long as you have some buffer to cover yourself up, you'll be fine in the long term. And as you rightly said, it's a long-term game. You just can't make money overnight from property.
Yeah, I think it's interesting too, Navin. I mean, what we saw over that COVID period, you know, there's a lot of levers that the governments can pull in times that there's going to be, you know, those issues that you were suggesting that can happen.
Yeah.
So what we saw was, you know, a lot of these first home buyer grants and the stimulus that the government was putting back into property to keep that market ticking over, to revitalise the economy. So that to me as an investor is a great thing.
Yeah.
Because I'm thinking, okay, if there is some exceptional circumstances and some unique circumstances that happen in the next 5, 10 years, 20 years, you know, it seems like over history the government's going to assist here and prop up the property market in some way or support the investors. And we saw that through even the lenders and the banks as well, didn't we? Making changes during COVID, allowing, you know, changes in repayments and that type of thing. So there is some support there too if there are some things out of your control that does happen in the property market, which I think is good to keep in mind.
Yeah, no, definitely. That's a very good point because COVID was a disaster which everyone got scared of, and then everyone thought the market is going to crash, and it just turned totally upside down, and it's because of the government stimulus which they injected in. Because government knows 13% of the economy is construction, and if they inject money there, things will turn, and that's exactly what happened. And if you look at 2008-9, when everyone was in fear, the same thing, they offered about $32,000 of grants for first-home buyers, same sort of things, and the market turned. So, I mean, we are so fortunate to be here and where the government is supporting such incidents. But as an investor, again, there will be risks, but obviously there's always way out of it.
Yeah. And it's about managing those risks, particularly with that planning and setting yourself up before you make that decision.
And most first-time investors, the number one risk they foresee is, what if I lose my job? I invest in properties, I have my own property, I'm going to get stuck. And what I always tell to them is, you might lose your job. Look at the worst case scenario, you have no income, you might still have a rental income. Worst case, you just sell the property. You always have an exit pathway if you really, really get stuck. And
100%, yeah.
It's an asset which you can dispose. It's not, you're stuck with it.
Yeah.
And it's not like crypto, right? You might put some money on crypto and it has come down drastically, which you have no control of. You can sell it, but then you're making a huge loss.
Yeah, that's right. That's right. There's ways and means with property. You've got bricks and mortar there that you can touch and feel, which a lot of people feel a bit more comfortable about.
Yeah.
So that's another factor too, isn't it? That I'm not going to talk about crypto or any other currencies. I've got no idea, to be honest, on any of that. But there's a big difference in the residential market anyway.
Yeah. And how can us, Grit as well as Frasers, help an investor to take through the property investment journey? Let's start with Frasers.
Yeah, so we, and I think rightly so, and particularly when I'm dealing with our clients, the questions we're asking the client is actually putting it back to the clients when we're meeting them. Have they done their due diligence?
Yeah.
It's important for both of us.
Yeah.
Because a lot of, in my role and with Frasers, a lot of what we're selling is off plan.
Yeah.
So at the end of the day, yes, you may have a deposit and you might be able to sign a contract, but you do have to settle the property and that might be in 12 months, it might be in a few years' time.
Yeah.
So for our business and for the client's best interest as well is, okay, great, you're interested in investing perhaps. Have you spoken to your broker? Do you need assistance with that? So that's one of the first things that we cover.
Yeah.
And, again, it's that chatting to them about, I will often ask someone, okay, what are you looking at investing in? Why are you looking at investing? Oh, well, this is for my kids later on because they want to study at Melbourne Uni perhaps, and it's really central to that, and then I'll use it as an investment after, or my son's going to move into it. So it's finding out why they're looking to buy.
Yeah.
Have they got the capacity to buy it? And then we can try and find the right fit for them or recommend some suggestions to them that might work for them and for their family.
Yeah.
That's really the approach we take. We're not, as a salesperson for a property developer, and others may be different, but we're not here to give financial advice to people or run a investment analysis for someone and sit down and work out what they're earning and all that sort of stuff.
Yeah.
That's not our role, but we'd love someone else to do that for them before they actually commit to buy with us, so that we're all on the same page. So that's where we're sort of directing back elsewhere and just trying to ask the right questions and obviously listen to that client to find out what they're trying to achieve with their property investment. And then can we help them,
Yeah. And also one of the key differentiators which I have seen with Frasers as opposed to other developers is the level of detail and amenities you go into in a community. If you do an apartment project, you make sure there's amenities close by or in-house, which adds so much of value for the developer as well as an investment. And also what I noticed was the aftercare service, the customers. So because we have referred so many clients to, and every single one of them loved it. And they love the fact that they've been taken care of even after the sale, which was fantastic.
Yeah, I think there's been two really big shifts in the journey I've been with Frasers, Navin, and I think in general now, and whether it's, I think people have always been busy, but it's always one of those topics, isn't it, that everyone seems to be getting busier and have less time. But we've certainly seen it feels like to me, it seems that those master plan communities that Frasers are really great at delivering, where they are offering a lot of amenity and a great lifestyle for people, are really attractive spaces that people want to live in. And really that's the philosophy I know of Frasers in what we discuss is creating a community where it sounds pretty simple, but creating a community where people want to live is the key to it. And I think a few people, I think there'll be some people out there quite surprised as to the thought, the research and the work that's done behind the scenes before, a project, like, for example, our Burwood Brickworks project that we had a number of your clients invest and live in. That project, was an old brickworks, what we call an infill site.
Right.
So it was sort of disused and sitting vacant for a number of years. So, there was years of planning and design and working with, local councils and government departments, looking at density, open space, that beautiful plaza that we've designed, the open space and barbecue precinct, tying that in where everything's walkable. So people, if you notice the design with that project, the roads aren't connected. So the design, the thought of the design is that people that are buying a townhome in Burwood will walk to the shop, which is neighbouring. And again, we've provided a fantastic retail and shopping precinct there for residents. And along with that, again, you've got your cafes, your restaurants, your cinema and medical centre and everything else added onto it. So there's a lot of, work in the background to find out, even little things like researching that local community, a little bit like they do with new products of food, and when people, they'll taste the product and make sure it tastes great before they launch a new muesli bar or whatever. A little bit same with property. Some may not realise, but again, it's researching that local community. Okay, if we're going to develop this site, what would you like to see in this site? What do people need in this community? One of our other communities in Manborough, for example, just out of Werribee. A lot of those local residents said, well, this is a booming corridor. So in Werribee at the moment, it's really difficult to get our kids to get a swimming lesson and get into the local gym. So Frasers then said, okay, this is coming through loud and clear. We need to invest and put and build a residents club for all the residents of this community. We'll put a pool in there. We'll put a gym. And we'll put a full-size gym, the same as what you would be joining if you drove into Werribee and joined the Jets or wherever gym it is. And that just came about just from doing the research, doing the right planning, putting a lot of thought into the development, and then having that vision and that belief behind you as a developer to say, well, what are we trying to achieve here? And what's the end goal? And by doing that, as you know, with Burwood and a number of our other projects have been really successful, and people love living there, which is fantastic. And that's the end result that we want.
And from our side, we specialize on the property investment planning. So that's, again, as we discussed, where are you right now, where do you want to be? And then we come up with a strategy and a plan to get there, and understanding their taxation, superannuation, and all those other aspects, so that we come up with a plan and a strategy on how best to tax minimize, how best to use your superannuation, and how best to increase your property portfolio. And then property is a byproduct based on what their portfolio is right now. They might be in Sydney, who is heavily invested in Sydney, but investing more in Sydney might incur more land taxes for them, so that they can reduce some cost if they invest somewhere else, and vice versa. So property is a byproduct. We have a variety of stock across Australia, and that's what we do day in, day out. So that's how we help them.
And I must say, Naveen, they're the type of clients we love to deal with, because they know what they want.
Exactly.
You've already done that education piece, I guess, for them. And then when we're talking, I know in the past, it's more about, well, this is what my client's looking for. You know, what have you got? This is the price range we need to achieve for them.
Yeah.
This is what they're looking for. And we can then go away and find hopefully the right fit for them.
Yeah.
That's going to support what your research and what your investigation has done for them.
Yeah, I think education and the knowledge is the key for an investor to make a decision. If they are well educated, they know their numbers, they know the research, then making a decision is very quick. So that's what we heavily invest on, especially even if we go overseas, educating them on a simple fact that can you actually invest in Australia as a foreigner is a question they ask themselves.
Yeah.
But then how to is and all those things. So it's so important for us to educate them on the investment journey.
Yeah, and I think there's a lot to it as well, because you've got that education piece that you're doing with the finance background and everything else that's going to work for them, and then let's for example we're then talking to them about house and land, where you're talking about there might be two contracts, they might be dealing with a builder, they might be dealing with the developer for land, so there's a lot to take in. So. I know as developers we really appreciate working with people that take the time to explain how everything works. So the time that they come to us and discuss these opportunities, they've got that knowledge behind them, so that it makes our job a lot easier too.
Yeah.
Just to say, okay, this is something that will work for you. The guys have already explained how it works. You need to sign this one. You don't pay this 5% here, and then. I think it's a much better experience for people as well.
Yeah.
Because it can be, again, I think that's the other probably downside of technology. There's so much information out there. It can be really confusing, can't it? It's like, as you say, where do I buy? What do I buy? Am I doing the right thing?
Yeah.
So there's all these questions. And, let's face it, it's one of the biggest decisions that people make in their lives.
Yeah.
So... it shouldn't be something that is done in a split second.
Correct.
There needs to be some thought to it. Yeah.
All right. I think we covered a lot of insights. Pretty good podcast. And thank you so much for coming in, Adam.
Anytime, mate. I hope I can join maybe series 10 or 12 to do another follow-up. It'd be fantastic.
Of course.
Thanks again.
Thank you.
Monopoly by Grit.